Hello everyone, today is Friday, December 18th, 2020. My name is Evan. Welcome back to our weekly stock market analysis video. If you're new to these videos, welcome. You're in a good place. We break our analysis up into two parts. In part one, we're going to review everything that went on this week in markets. We're going to look at performance and sectors and internals and volatility and really just sort of point out everything that stands out, looks interesting. And then in part two, we're going to jump into the charts. We're going to put everything into context. We're going to look at those longer term trends and try and make sense of everything that's happening. So hopefully that sounds good. Let's dive into some of the headlines, some of the takeaways from this week. We had all major averages closing green on the week. So 2020 is quickly coming to an end. Markets are ending with a bang to the upside. So it's good. Markets have been on a complete monster run up here over the past few months, ever since the elections got out of the way, and things continue to look good and stretch to the upside. The bond market on the other side of the coin, though, is looking pretty heavy. We've been talking about the fact it's at a decision point. We're going to look more on this later in this video, but it is looking a little bit dicey there. And everyone's favorite crypto, Bitcoin, breaking to new all-time highs, surging through them this week, cracking that old 20K barrier. And we did add Bitcoin to our tracking later in this deck, so we'll look at that in a little bit as well. So let's jump into equity market performance. You can see green across the board here. Last column is the 1 week numbers. You can see everything was positive. The standouts was, let's see, Nasdaq 100 and the Russell 2000 up almost 2.5% and 3% respectively. Everything else in between is working as well, but it's a pretty powerful combination when you basically have the smallest companies that are participating, and then you've got the mega caps in that Nasdaq 100 also participating. It's a strong market. If we look at market internals, that basically supports the story here. We had almost 1,000 net 52-week highs in aggregate made this week. That's a very healthy, constructive number. The cumulative AD line up around 1,200 or so. It's decent, not the strongest, but still reasonable. Percentage of stocks over 20 SMAs, only about 55%. So it came down a little bit into Friday, but still flirting, a little over with that, with above the 50% mark. If we look at the cumulative NYSE 52-week highs minus the lows, this is how it stacks up here. Add up all of the highs over the past 30 days. This is the chart. That's what it looks like, and that is what supports this market heading higher. Continue to say it week after week. Really no new analysis here. It's kind of the same trend that we've been looking at, and eventually this changes, but again, it's a very difficult proposition to try and pick that unique spot and fight that uptrend. So this is what is so supportive and healthy in these markets. Now, if we take a look at sector performance, almost everything in the green here this week. It was only energy to the downside and 4% to the downside. So, notably in the red here. Obviously, it's had a very strong return here over the recent months. So that's, kind of given some back here is to be expected at some point. Utilities and industrials also kind of rounding out the bottom three, very, very flat there on the week. On the upside, technology, consumer discretionary materials, rounding out your top three outperformers. Now, if we move on to volatility, there's really not a whole lot new to say here. It's very, it's like watching paint dry here. Basically, it's been sticking in this general area here for the VIX. I mean, I think, notably at least though, the VIX is still holding up at these same levels, right? So we're still over 20. We're hanging, around the low 20s. So despite the market, continuing to sort of push higher here, we're not seeing a total collapse of the VIX. We're not back in the teens yet. So it's hanging in there, which, has something to be said for just the general landscape that we're in. But, when we look at term structure here, there's basically no change from last week. If we look at interest rates and credit here, so we saw yields basically rise across the board. Credit markets positive this week as well, investment grade and high yield. Not a whole lot to say about this deck here, this slide. Dollar and commodities. So it was another week where the dollar basically got pounded. This is pretty strong trend now to the downside. It's very well known. It's kind of popular now that everybody's sort of talking about the demise of the dollar, which probably means we're closer to some type of, short-term bounce bottom rip in the dollar index. Again, just speculation and anecdotal evidence, but it does seem pretty common and kind of cool to say how the dollar's just burning down and it's an easy short. So maybe it just continues to slide, but obviously it did this week as well, 1.1%, which is a big move for the dollar index. Tracking via UUP, gold up, silver up, both of those at interesting spots and needed kind of that push higher. So we'll talk about that later in the video. We got Bitcoin up 20%, 19% this week alone. So pretty impressive. That's the smash through its prior all-time highs. Agriculture doing well, crude oil doing well, natural gas doing well, everything here liking the down dollar. Report card from this week, it was mostly all positive marks across the board. Volatility environment still in the penalty box, but we've got an A- here for this week's report card. So lots to continue to like here. We're a little bit stretched in some markets, but as we know, that's kind of the case and par for the course in these strong uptrends. So as we do always, we finish it off with our positioning here with our two trading systems that we trade here at the Trade Risk, Merlin and Lamerick in the bottom. So Merlin here is still very well invested into this market, 93% long right now across 37 positions. So it's been, essentially trimming profits, locking in gains, closing out positions, and then kind of immediately replacing them with new kind of lower risk or just more attractive opportunities. It's had very strong last month, continues to have a very strong this month, and leaning into this market. Now on the downside, Lamerick here, which is much more shorter term in nature, it's very tactical. You can see is actually net short this market right now, just slightly here, 2% position to the downside. Now there's 10 positions on, so what that tells you is that it's a mix of longs and shorts. So it basically has a balanced portfolio right now of long trades and short sales. So that's what it's looking at. Its average hold time is only about 4 days or so. It only cares about the next week's action, and that's what it's looking at. So that is the way we're positioned. You can check out more about those trading systems at the link you see down here on our website. So we'll be back in just a moment with part 2. All right, we are back here. I've got TC 2000 open. We're looking at our equity market grid. So price itself is the white dashed lines you see on all these charts. The multicolored dots are a custom smart trend filter that we've developed, measures price and volume, helps us determine trend strength, and overall just directional bias. So this is a weekly chart of all of our equity markets here, and as basically the story has gone for the past couple months now, there's been no change here in terms of outlook, trend direction, or anything like that. We've essentially been in this persistent uptrend now. We had a little bit of volatility here at the mid-October, early November time, but that turned us into this neutral state, and then we've resolved that higher, and that's been the case for the past month. If we go down to the daily chart, we had a little bit of chop here in the S&P 500 really over late last week and early this week. So we had some neutral readings being printed here, but you can see basically as of Thursday, we resolved back to the upside. And then even though we did close lower here on Friday, we're still printing bullish for the S&P 500 on the daily chart. So no big change there. Bulls still have the benefit of the doubt right now. We are going to talk about the S&P 500 from a price action perspective in just a moment, and a little more color on this chart. But basically, bull reading still there. Nasdaq, same thing. We had a little bit of uncertainty here last week into Monday. That resolved itself though quickly on Tuesday, and we've been off to the races. Russell 2000 is about as smooth as you can get, just continues to trend higher, and same thing with the international markets. So long story short, trend direction here from a long-term perspective is bullish. Daily chart, shorter term, midterm perspective, also bullish. Now, here's where things get more interesting. Let's go down to some candlestick analysis. Let's go to a daily chart. And what you'll see immediately is the larger range that we saw in the S&P 500 today. Now, the close during the last, I think it was last 20 minutes of the day. Let's go down to a 1 minute chart. Let's just see if this holds true. Yeah, take a look at this range here in the last call it 20 minutes of the trading session. We closed up, we had about almost a 1% rally here off of the lows in the last 20 minutes of the day, basically negating the 6.5 hours we traded during the session, all kind of whisked back away to the upside in the S&P 500. So what we ended up getting was a good save here from a classical sort of price action analysis, because we did drive off of the lows. But had we closed lower, this would have looked a little more pessimistic. So when we look at this, though, we still see an above average volume day, and we are still basically negating much of Thursday's up session. So what we have here is a point at which, if we failed, we would get just about some short-term, you get basically a short-term sell signal here if we get more follow-through lower next week, because basically what you would have is a very short-term sort of breakout to new all-time highs. That was essentially Thursday's session, and then an immediate sort of rejection and fall back into this old range. So again, couple of things to note here. This is really speaking to the very short-term tactical traders. We already sort of laid out there that the trends are against you, right? This is a counter trend kind of sell setup or tactical short sale setup. The good part about this type of setup is your risk is pretty well defined, right? So if we do start to, get follow through selling next week, or let's say we open up around, 10 points higher in the S&P, and then we start to sell off intraday, you have an opportunity potentially to, put on a hedge or some tactical short trade for a move back into this range, and your stop is clearly defined, above this area. That's a way you can look at it. Again, I don't really trade that close of a time frame anymore myself, so it's not a trade I'll be placing personally, but the setup is kind of finally there, so to speak, from a price action perspective. So I think that's interesting. It's something to pay attention to whenever you get kind of breakouts or moves above significant prior levels. If those levels start to fail or we start to give those areas back, that's a point to take notice, and that can lead to some good trade opportunities. So that's a very short-term kind of, pessimistic sell setup that you have there in the S&P 500. Again, if you want to take a broader view, you look at some of these slopes that we've, channels that we've essentially been trading at here recently. You can essentially say, look, everything's noise until we start to, break below this either rising trend line or, some prior horizontal support. So basically below 3640 is when you can actually see some technical damage, and then, traders might get worried at that point. Really just depends how active and how close you want to watch price action. If you're more longer term, obviously you're just kind of sitting back and watching those bigger levels. If you're very, very short term, you're looking at things like this. So that's something there that's interesting in the S&P 500. If we look at the Russell 2000, really not a whole lot new to say here. This has basically been just, on its little grind higher here. We had this area we were watching coming into this week. So we had this very tight, clear up this line here. We've got a lot of doodling from past videos, but we talked about this in our last video update, essentially this tight range that we saw in here, and watching to see which way that would resolve. It resolved to the upside, and now you can see prices continue to move higher, but you get this slightly, pessimistic looking Friday session here where we, kind of pushed up, closed towards the lows, and, gives you a little bit of worry in there. One way you could look at it is to, again, use sort of the recent slope at which we've been rising here. Things are pretty tight. We're up against that now. If we start rolling over, falling back into this old range, breaking this trend line, then you have some very short-term signs of cracking. Basically, all the things apply that we just talked about in terms of time frame for the S&P 500. And the same thing for the Qs. Qs look a little bit better than kind of everything else here. We do arguably have, kind of a bearish engulfing day here. Note, if you're using the classic definition of a bearish engulfing day, it's just engulfing the prior body. So you can see we opened above yesterday's body or closing price, and we closed below it where we opened yesterday. So that here is, a little bit negative there in the very, very short term. You could also look at this kind of rising trend line that we've been at. You can see we're hugging it right now. You can draw this more precisely on an intraday time frame. So you have some potential signs here in the short term that this market could, at least relax a little bit. So we'll see if that happens. There's your sort of analysis there for broad equities, from long-term trend analysis down to very short-term price action. So let's look at some other markets now. If we go to VIX here in the bottom left is basically still in a sell signal here, still printing. Forgot I did not look into why these dots here are not coming through. So I meant to make a note of that, and I will see if I can get this resolved for next time, because our smart trend filter technically ends here, and we're not getting the latest points. That might be a volume issue here with TC2000, so I have to look into that. So if we look at TLT then, on the bottom right, you can see longer term it's still been in the sell signal for some time. Daily chart here, it's a little more uncertain. We're going to talk about this at the end of this video, because I think that's also setting up to be an interesting trade, maybe coming into the new year. If we go to commodities next, you can see gold weekly chart coming back to its trend filter here, so that's interesting. This has been in a sell mode for the past 5 weeks now, and it's now kind of coming back up and testing it. And in fact, silver, which printed bearish here 2 weeks ago, has moved back into the neutral state. So you can see these recovery, rallies, bounces in gold and silver starting to repair some damage. If you go down to a daily chart of both of these commodities here, you can see that gold transitioned higher on Wednesday of this week, and you can see same thing for silver, transition, put a buy signal on this Wednesday, and then it basically saw, continued gains after that. Oil in the bottom left is just going off to, the stars. This has been in a very strong uptrend over the past 2 months as well. No changes there. It's pretty extended on most time frames, but it's certainly printing bullish trends across the board. So let's jump down to some individual charts now. Let's start with a TLT, because I do think that's interesting. We spent time talking about this the past few weeks, but I think this weekly view here kind of tells the picture that I'm watching. So you essentially have this flat sort of horizontal support in here around 155. It's basically been, you obviously had this crazy move here in March, which is when essentially the Fed kind of came in and stabilized everything. But that aside, we have virtually been trading kind of sideways contained over 155, and we've tested this area multiple times. We're back at it now, and we're starting to compress. So we have this lower trend line kind of coming in here, and we had this inside week last week being printed, and then lo and behold, we basically got another inside week back to back here. So back to back inside weekly bars for the TLT with lower highs, with this flat support coming in here. So things are very tight, and this is going to be, again, an interesting expansion here. If we come cratering down below 155, then certainly that's pretty bearish development here for Treasury bonds. If though we can start to rip up from here, and we can start taking out these prior let's say really to the upside over, let's call it 160. I mean, if this thing starts really closing over 160, then you could get a nice kind of squeeze trend move higher for TLT. So that's I don't know which way this breaks. So I'm just watching this like all of us right here, and I think it's at an interesting spot, and it's really tight, and maybe we get another week or two of kind of compression here, and then starting in the new year, we'll see which way the capital flows, and that could be, just kind of an interesting trade and start to the new year. So TLT, I think it's worth watching, and that's kind of the setup there that I'm paying attention to. If we go to some individual sectors, XLI, let's start there. I wanted to talk about just how tight this has gotten. So this is the industrial ETF here. So kind of looks very similar to what the Dow is looking like. But really, look how tight and just totally sideways this has gone for the past month. This is very, very tight trading here. So I think this is just an interesting range to watch. Again, kind of same thing. We got volatility compression. That usually leads to expansion. And that's what we want to be paying attention to. If it moves to the upside over, let's call it 90, then that's certainly in the direction of the prior trend and would bring us to new all-time highs. If it starts to roll over here, then that's, obviously not good developments for the industrial. So let's pay attention to that. And you can always look at individual stocks underneath the hood here to get a little more beta or participation in that direction. XLV, I want to talk about that. Let's see here. So this one is, I just thought was an interesting little setup. You kind of got this nice little, handle sideways consolidation. You've got a little bit of a kind of rounded bottom that got put in here. And, you're back up to these highs. So if you're looking at this as like a classical pattern here, certainly a move over 114, I think starts to look pretty interesting in healthcare. It's been very quiet recently, but it looks like it's set up pretty nicely. XLE, let's end there. I want to talk about XLE on the weekly chart. So energy here, we've been, bulls, excited about it, been talking about how it's a good place to be for basically since this week right here. We had a bearish engulfing week this week. So it was down 4%, and you can see we opened above last week's body, closed below it. So this here could mean that, we just got to kind of settle down a little bit and maybe pull back. I do think pullbacks are probably opportunities here in energy. That's the way I'd be looking at them. So I'd welcome a move back down into, the 36s or so, get back down to these November, this little November pivot in here. I think that'd be an interesting spot to pay attention to it and to support, see if buyers step back in. Not saying it has to go down there, of course, but I'd certainly welcome it. And I think it might be an opportunity there for energy. So that's it. That's what I got for this week's market analysis. A bunch of different looks there and a couple of things to pay attention to. So know your time frame, know your risk tolerance, and that then lies the opportunity. So thanks so much as always for tuning in and watching. You can subscribe to our YouTube channel or follow us at The Trade Risk. Have a great weekend. We'll see you back here next week.